Hello everybody, my name is Graph and I'm going to be going through all the things that I see that are related to graphs in the world of crypto. With me today I have my housemate and my friend Jade, who has some notes from our early attempt at a podcast of some questions we're going to be answering in related to the bull market support bands. I'll ask her a couple of things now and then just to see if she's understanding. And hopefully you can follow along as well. First, we'll share our graph. Let me grab the graph for you now. Now, so this is Bitcoin. Okay, I've got BTC, USDC. To find these on TradingView, if we need one, I can do a separate video for that. Please let me know. Now, up here you have D for days and W for weeks. I'm on the weeks, so we want to look at the longer time frame. This is Bitcoin. Each candle is a week, okay? Stemming back from 11th of November 2019 to present day. I can shove it over a little bit and we can see even more. This is an awful lot of data that we can study. First, we're going to look at the bull market support band. Now, I have it here already. I'll delete it for you and show you how to find it. So we go up here to indicators, click on indicators, and it opens up and we get a search bar. And you can type in any indicator you hear from anybody in here and try and find it. Bull market support band. Now here are 4 different support bands that 4 different people put up for all of us to use. It's the 20-week SMA and the 21-week EMA. Don't worry about that. That is not what the bull market support band is about. We can talk about that another day. Now I click on that, and this is our support band, okay? So this was the start of the bull market most recently. Now to start the bull market, we had to do a couple of things. Go over the support, bounce, and go up. Now, we're going to look at the main places where the bull market support band interacts with the price. Now remember, we're not going to look at the prices. That just confuses things from my perspective. We're just going to look at this price, not the physical numbers, and an indicator or numerous indicators. We'll compare this against that. One strange line against another strange line. They look pretty similar. Now, where do they meet? Let's get a circle and we'll find where they meet. Where they meet can be interesting. We want to look at how they interact. So they meet here. Make that a little bit bigger. We don't need to be very accurate or on the week graph. We can have very large guesses of where we think price has gone or will gone, or where the interaction took place. I'll grab another circle. Ah, yes, I shall lock the circles. Now, over here where we are today, we're here too, and we'll show a few around, and here, 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 we'll leave those ones, and none here. Oh look, and just under this. Now, there are 1, 2, 3, 4, 5, 6, 7, whoops. Now, 7 interactions with the bull market support band. This works just like any other indicator or resistance or support or any line you or anyone else can put on a graph. If it interacts with the price, we're interested. We want to see what it does. Now, Bitcoin and all the cryptocurrencies go up, down, and sideways. So we're only ever looking at 3 possibilities. And when we're trying to look in more detail, it can be done on shorter time frames on like the day graph or the hourly graph, but it's only very useful if you are doing high trading, which we won't discuss today. But this will give us general idea of the whole bull market and what we can expect by looking at what happened. So what happened, we start before the bull run, we were under the bull market support. Under. We came up a little bit, didn't hold it like most of our resistances. It's hard to get past these things. We failed. We came back down. We failed. Tested it, went up. So on a retest like this one, that's a good time to buy. Okay, you see, failed. Don't buy the breakout. Go down. Up. Test. Okay, it's tested. We have strong support from the bull market support band. Let's buy the next time we hit it. Hits it. Boom. What happens? Acceleration. Okay. So when you look at every line, you want to look for the retest. Break of trend, test, retest. And we buy the retests, whether you want to look at any time frame. Now, then we started to speed up and we accelerated. So when we move away from support and there's space between it, we go faster. Being above any of our supports are very bullish and price goes up. It went straight up. Now price doesn't go straight up all the time. It stops and come down. Now in previous cycles, it would come down and test the support. That's great. That's really healthy. Went up, came down, still didn't test it. This is not healthy. In order to sustain going up, we need to be going down. So when you are trying to figure out when can we go up, you have to start with when can we go down, unless we're already down. Now, currently, we're just starting to go down. So looking up is something we can do for, we'll do it, but guessing where we can end up down here, when we land on 43 or 37 or 40 and test it as support, then we can go up. Now we've wicked off this. All right, I would like to see a full daily candle, not just a wick, like a full daily candle. And the full daily candle testing, like if this one came all the way down here, sorry, the weekly candle, and we had a nice big red and we hit that, I'm like, all right, good. That's one. What do we want? To come down again. If we go up now, we still have to come down again. We have not tested it. Now you can skip some retests, but it's not healthy and it's not what you want. You want to buy the retests. So it's very likely we come down and retest this number again. Now 43, where we tested and we hit the wick, I'm going to remove the circle. As you can see, not only did we test the top of it last week, we're testing it, we test the top of it this week. Still, I would like to see a full candle. I would like to see a price close at this level, lower. I don't want to see a price close higher. I want to see us bounce off this before we move. If we move and go up now to 50, 51, 58, we will have to come down and test this to feel confident about the market. I would have to feel confident. Now, if we continue up, off we go, great. But we still have left holes in something we didn't test. And this is what happens when we don't test something for too long. We come back to it. If we don't test it now, I would consider the possibility of having a 3-peak cycle if we continued off. And that will happen. I'll have other possibilities of having a 3-peak cycle. They're not peaks really, it's called a local top. And a peak is generally a blow-off top, which I can show you down here. Let's see. This is 2019. Now you can see that is a blow-off top. I can make this one a little bit bigger for you so you can see all of it. Straight up and straight down. Okay.
Okay, what does that mean?
And you see the, thank you, Jade. I didn't explain it very well. This huge wick, okay? Huge wick. Here we had FOMO, we had retail, we had greed. We had
everyone bought.
Everyone who doesn't look at a graph, we're like, oh, Bitcoin's going up because they were hearing it in the news. You don't hear about it till it comes up to around here, unless you're in a community like this. You don't hear about it down here. No one cares. No one's shouting about it. When you get here, everybody hears about it. And then the market maker is aware. He's like, oh man, there are people here to buy the coins. I've made so much money. I'm going to start selling. So the market maker starts to sell the coins very rapidly. And we have a blow off top and price drops by 80%, approximately in previous bull runs. Now in this bull run, because we didn't test the market support, and everybody was like, oh, look at Bitcoin, it's going to the moon. All retail found out, and your granny found out, everybody was talking about it. So they started buying, and the market maker was like, oh, there's somebody here to sell to. So he sold. Now we could have bounced off the market support here, and that would have been great, to the moon. But based on the formation, which we won't discuss, it's called a Wyckoff formation, but you can see really the slowing down, the slowing down, the slowing down. And the moment we went into the cloud, we were, or sorry, not the cloud, I'll put up clouds later, into the support band, we were done for. Now we could have bounced off the bottom of the support band, but we didn't. We went straight down and we had to find support elsewhere. This support we found was the last time we had, last time we found support on this red candle. This was finally a retest of something, a retest of this. Previously, we didn't retest this. We weren't retesting anything. Came down, retest this. This is a very good sign for where the market is going. This is the first retest of the market since we went up. And it's below this, but we got above it. I think we've got quite a height to reach. This could very well just be the very start of the bull cycle. A lot of people are, and myself included, discuss it as like this. I say a lot the second half of the bull run, but this may not be a bull run. It's just a retest. When you look at it from here to here, and compare from here to here, we didn't do a lot. We didn't do a lot because we dropped 50%. Now, if we stopped here, we did loads, but we pulled all that back. So expecting that when we pass 64, which was our wick, but when we pass even 58 or 59 or 60, the speed of which we can travel because of this lovely bounce, ideally a second bounce from anywhere, it does not matter. Any nice bounce above 37.5, ideally above the market support band. But if we went down below it, and bounce quickly, off we'd go. The market support band exists because people place their orders on it and they want to buy. So the market maker sits down and goes, oh, I like the bull market support band. Where is it? Okay, we normally touch off that. We haven't touched it. We didn't do many testing of it. We just broke it. Oh, when we break a resistance, we don't buy. We wait for the test of resistance. So I wouldn't be buying this in this scenario. I did buy it because DCA is a wonderful tool. But if you were looking at a smaller time frame, you would want to see a second retest. Okay, if you were worried about your money. And in trades, I wait for the second retest. This, however, has so much upward potential. You need to be in this area. If you have not been buying crypto in this area, you are going to be the people who who buy off me and buy off the market maker. When we have this test and the next test, that's two opportunities. The next test could be lower, then it would be worrying, we might go further down. The next test is higher, that would be positive too. We would still have a retest, but it was higher and it would show greater forward momentum. All these things are possible. Now, Jade, I have a long list of things we could discuss.
Yes,
what
I wanted to talk about the indicators. So how many bounces would it need before it shoots up?
Exactly. So with the bounces, and this is something that's difficult to understand until you watch it, and I've been watching it closely, is the idea that we need a retest. So this is an idea that my friend and old housemate told me. I call him the expert. He told me we buy the retest. Now, we didn't really get a chance to sit down and see what that was from his perspective. And so I had to figure out what it was myself. And everybody on YouTube would say buy the retest. They wouldn't really show me where the retest was. So we buy the retest, not the breakout. You can still make money on the breakout, buy the retest. And the retest is not the first test. There's the breakout, this one here, number 1, breakout. Number 2, test. Number 3, retest. Okay, how's that, Jade?
Yes.
You understand?
Yes.
So we break whatever line you have. We break it.
Yeah.
Then we test it. So what happens? I'll explain what happens. So what happens is once we break it, the market maker is like, "Ooh, we've broken a line. Price is going up. Let's buy." Market maker buys. Buy, buy, buy. Then the market maker is like, "Oh, people see the price is going up. They're going to FOMO in. They're going to buy. I'll sell some." So he sells some. Well, he sells it to this 2 bounce. If he doesn't buy back at the bounce and it goes under the bounce, price will continue down. He wants to hold a support. So once the market maker sells, once we're got upward momentum, and we can call it a bull run. In this period here, the market is different. So the market works differently at different times. But in the bull run scale, on the 1-week graph, test, retest, buy. Okay, and that works for all of them. And it's all down to psychology of the whole market, which I feel is easy just to call it the market maker, as opposed to saying retail, whales. You can include all. I've normally talk about 12 different ideas, but it's people want to get the most confusing information instead of looking at it in the most simplest way.
Yeah.
Next.
And then we also have the clouds. Can you explain a little bit about the clouds and how that will affect the graph?
Excellent. So I love the clouds, the Ichimoku clouds. You search for them the same way. I have them here. I'll pop them up for you. And this is a button that makes them invisible. So I pop them up. Now, I'm going to make it a little bit smaller so we can see the clouds in all their glory. Now here we have our bull market support band, price, clouds, and then there's some lines that come with the indicator of the Ichimoku cloud. Learning all these names is time consuming and can be confusing.
Yeah.
Looking at them as a green line, a blue line, and a red line.
Yeah, the simpler the better.
Makes a lot of sense, and we're nice and easy. We are going to ignore prices. We're going to ignore all the strange names that are different, that are difficult to learn.
And all the triggers to the emotions. So what would you name that? What would you name that?
Okay, so I'm looking at all these things interacting together. Okay, and we can call this like a snake in the sky. You see, it's just moving like a snake, slithering in waves. Okay, and you consider this a cloud in the sky behind it, and snake is slithering between the cloud and between, let's say, this mountain. Okay, and below is something else. Like I look at it normally as like a road or a path. It looks better maybe in this angle to consider it a road or a path. I'm not sure. Anyway, and they all will keep Bitcoin going in a direction. Okay,
yeah.
And it's climbing through these mountains on the cloud, going up, until it goes below the cloud, until it goes below the bull market support. It is bullish, and we expect price to go up.
Oh, about the cloud, I wanted to ask. So how would you handle going through the cloud, watching the Bitcoin graph without feeling like you don't know what to do? Because I heard that the cloud is very unstable, or is it stable?
Yeah, so I've talked to Jade a lot about the cloud. I like the cloud, so she's got some general ideas. Okay, so the cloud is the same to the market support band and the rest of our indicators. On this graph, we can see it on the market support band. But what I'll do is I'll go to a lower time frame, and we can see the cloud interacting with price more frequently. So when you change to different time frames, you get different clouds. They're not in the same place. Like the rest of the indicators would probably all be they'll be in the same place if you set them. So I would set the bull market support band to the same price. It stays on this one. I didn't set this one for somebody else. Okay, so now we have the cloud behaving the same as the bull market support band. Okay, all the indicators do this. They are all useful. They all interact with the price. So I'll get rid of these circles and we'll look at the cloud interacting with price. So at different time frames, it can show you different things. Here we can see, I know it might be a little more, I'll take out the bull market support band and we can just look at the clouds. Now, here we broke the clouds just like normal, just like the bull market support band, came down, didn't test it, got close, we hit this red line. That sounds good. And we went up again, up, 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 up. You can see that the clouds go up and got bigger. So it's bigger as some resistance. Here we can say we're reflecting. It's like a mirror image.
Yeah.
So sometimes it's a mirror image on different time frames. Sometimes it will look like a shadow, and sometimes what's the other one? Do you remember?
No. I don't remember.
Just a cloud. Yes, yeah. Just a cloud in the way. Yes, that's the one. So we came down, touched the cloud, just like we would like to come down and test the market support band. And we went up we went. And once we got into the cloud, so we got into the cloud before the market support bands, okay? It was an earlier warning than the market support bands. So the bands are down here, okay? So this is when a lot of people were like, oh no, price is going down. Yeah. But if you use clouds and you understood them back here, once we entered the cloud, you'd be like, oh, we're not meant to be in the cloud. This would be a great place to bounce for, but if we go down, we'll be under the cloud. I don't want to be under the cloud. So the market maker, some of the market makers defended the cloud and tried to keep us above it. And they pushed us out and got us to the top. That's not good enough.
Yeah.
The lines react as resistance and support. Inside the cloud, we can move freely. Inside the cloud, momentum continues in the same direction regularly until hitting the edge of the cloud. So I like to think nearly all indicators should be used in the same fashion. Yeah. Because you just consider we're going to move like a snake or a wave or whatever you like, and we're just going to bounce off all the lines. And if we go under a line, price will go down. If we stay above a line, price will go up. Now, if you look at the week chart and the day chart, you can make an assumption for what will happen in the weeks and the months ahead. Yeah. If you look at the lower time frames, you might just be able to figure out what's going to happen in a few days. Okay.
And you tell me a little bit about your wisdom of crypto.
Oh yes, and so one thing I kind of put down is the way I learned about crypto is learning one thing at a time. So let's say I started with resistance and support lines. I now I have them on some of my graphs. I know there are points where price can hit, but I can see that already with all my indicators. I have no lines here, and I can see, look, this peak and this peak, line here, line here, line here. And we can put lines on this peak and this peak and this peak and this peak, and this one all the way down. And it's the same on every graph. And so you can just look back at the last time you saw red and the last time you saw a peak of green and assume they are likely places price will go to again. If we are near those prices, we will be pulled towards them. We're pulled towards all the indicators because people have buy orders at them and people have sell orders at them. We call them the bulls and the bears, but they're usually the same person buying and selling the same coin. When we talk about the whales who have most of the money. Oh, yeah. So they control an awful lot of the market. I think, I'm not sure on figures. I think they're like maybe 80% of Bitcoin or 60% or 90%, but it's just ridiculous. They bought at the start. So they have more control over what we do when we're in these phases, like accumulation. And when we're in this is, I still consider this accumulation. We are going sideways on the daily graph. This is not upwards. Yes, we had upwards momentum, but we have to pass these things. Otherwise, we hit them and go back down. Now, do I believe we'll pass them? Yes. Do I believe we'll pass them in the first time? No, that doesn't sound like a retest. I feel like it would possibly take 2 goes. I think most of the time it takes 2 goes. That's why price comes down. We go up, we fail, we go down. We get support, we go up. So on the second attempt on the way up, we break. We break through our resistance, but then we have to come back down and test the price. And we can do that twice. Very often, of course. Sometimes we can do it once. And if we are rushing out of this bull run and everyone's excited, we can do it once. That's not good. That means price goes up quickly and someone will want to take profit. I will start selling my coins to whoever wants to buy them. And we will come back down and possibly test the 58 again, or the 59 or the 64. Like if we went straight through to 100 or 150, I would be selling a lot of my coins. We hadn't tested anything. Now, of course, I expect us to be testing things and having dips of 10, 20, 30, 40K, because it's not prices, it's lines. So we will, once we pass 64, we have to test it. We'll probably go up to 70, 75, 80, 90, maybe even 100 before we come down. There will be excitement. Yeah. But then I will have orders at 58 and 59 and 60 and 64. Now, of course, depending on how we got out, if we went up and sent some wicks down and tested it, I'd be like, oh, okay, somebody bought some. If we came down and tested it with a nice big weekly candle, I'd be like, all right, lots of people bought some. If we had 2 weekly candles spaced apart, I'd be like, oh yeah, baby, we're going to the moon. So objectively, once we're above the market support band, once we're above our cloud, I want us to come down as frequently as possible. Now, our cloud at the end here is right beside us, and it's big, which means it is more resistance. So we can hold this cloud and stay above it as we move forward in the market. And this would be a good place to test. And I wouldn't be surprised if the cloud and the bull market support band were tested at the same time, or very close to each other. That's like in this area or this area. The market support band is going up as well. We'll put the market support band back up. So it's always great to test 2 things together. So this is already in the cloud, okay? Now, that's going to start going up. So I'll explain a little bit about this. This is the moving averages, okay, over a period of time, put in price action from before, okay? So it's just telling you what happened already. This is most indicators, except the cloud, which is showing you what might happen. All other indicators show you what happened already. If you've studied the graph, you don't need these indicators. You know what's happened already. So this has happened already. We went up, 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 and we went sideways, okay? And that's it. Now we're going up. So price will go up. We changed the price of these candles with the ones back here. It's the bull market support band. I forgot the settings because I don't worry about these two too much. I think it was 21 week SMA or whatever it is. You go back 21 weeks and that's your average, okay? And if you week later moves, you're a week ahead, you drop off the 21st week behind you and you add the one in front of you, and that will change this band, okay? Now this band contains 2 things that some YouTubers and some people I talk to find relevant. I don't find it relevant because I don't find most of the things relevant. The relevancy is just up and down. Where do we bounce? Where do we go up? That's enough. Now, people talk about here when they cross and they call it a dead cross, and here when they cross and they call it a golden cross.
What is the difference between the dead and golden cross?
Dead cross. So dead cross regularly signifies the end of a bull run.
Okay, yeah, that makes sense.
And the golden cross regularly signifies the start of a bull run. Okay. Now this is on the longer time frames. Now you can get these crosses on every time frame on any coin you want. But what it's doing is very simply, this golden cross now, remember, good, up, has told us we went down and then we went up.
Yeah.
Now I can see that. We went down, then we went up. So they're telling me that. That's all the golden cross is telling me. Now, the dead cross is telling me what? We went up and then we went down. That's it.
Yeah.
Now, at places, it's a necessity to have a golden cross to go up because we have to go up to go up. But that's as simple as it is. Now, what it doesn't mean is we get the golden cross and then we go up. It does when it's the last one. And that's it. Do you know what I mean?
Yeah.
Now, when we're going sideways, we're going to get more than one. If we fail at anything, price will come down and the chances of the golden cross becoming a dead cross are going to increase. And if we were to do it soon, it would be very likely because they're still beside each other. It would be easy to turn them into a dead cross now. And lots of people will be talking about it. Oh, the dead cross back. Guys, it does not matter. Yes, we need these things, but it's just telling us now, when you have them near each other, it says we're going sideways. We went up, we went down, we went up, we went down. We know this. Now, when you have a mid-cycle peak and local top, so the bull run isn't over from our perspective, you get these in the middle. In previous bull runs, you didn't. Now, in 2013, there was also a local top and then an explosion. These didn't cross. In 2013, they still held the bull market support band. This is why more people were worried when we were under here. And it was certainly possible that we were to go down into a bear market. And it's still possible now that we could do it. It's a possibility. All the graphs are a possibility. We look at all of them. So our current possibilities to go forward are what, Jane? There are three possibilities.
Up, sideways, and down.
Up, sideways, and down. Now, do we need to graph up? No, just sit back and count your money. So I'm not too worried about up. Up will look after itself. But for me to go up, break between 59 and 64, bounce, off we go, bounce, retest, even better, off we go.
Yeah.
Now, to go sideways, we just have to stop at anything. We can go continue sideways. If we stop below 58, we're still going sideways from this perspective, starting from February. So from February till whenever, like this is a long time to be going sideways. It's very plausible that we go sideways for another period of time. Usually when we're under the bull market support band, it takes 3 to 6 months to get over it. I'll tell you why. It takes 3 months to get there. Now, if you fail, you go back down for 3 months. That's it. If you get there, you hit it, you bang on this line, you go up, you charge over it, you retest, and off you go. So if we were to fall below it, it usually takes 3 months on this graph and previous graphs for the price to get back above it. And history is usually very accurate when it comes to graphs. Even if you're looking at a 5-minute graph, please don't unless you're an expert. But if it says price was at A 5 minutes ago, you'd be like, I can buy at that price. It's going to go back there. It's very likely, price is very likely going to go back to wherever it was until it gets a retest of a bounce. Then it's very likely to go up as long as we have lots of upward momentum. You can check upward momentum with more indicators if you like lots of people. Or you can look and go up, down, up, down, up. I'm like, okay, upward momentum since the 20th of July. That's a long time, isn't it? Not really. It's kind of small in relation to the whole bull run. One of these, this was 40 to 28K, just like where we were stuck, where we got stuck between these resistance. That is a 10K drop. 10K drop, 20K drop. These are going to be very normal things as we move forward. Anything else, Jade, when you talk about it?
I think that's about it for this one.
All right, guys. I feel like we covered a lot of stuff. Send me any of your questions. I find that most of the questions can be answered in the same way. You can ask me any question. I'll just put up. You ask me about an indicator, I'll put that one up, and I'll tell you about how we bounce at it, how we go through it, how we go over it. I'll tell you the market psychology of why we buy and sell, which is just buy low, sell high. That's it. We need to do the same. Buy on the red candles, sell on the green. I look forward to doing more of these podcasts with my friends. All right.
Okay.
Goodbye, everybody.
Cool.
Goodbye. Stop and share.
Nice. That was good.
Now, I wonder where Zoom puts these videos. We gotta find it.
Oh, you said, did you record them?
Yeah.
Then it will save onto
Yeah.
your desktop or onto the PC. You look up Zoom video. And it shows on your desktop.
I can press view here. Look.